Greetings my fans. In today's video we are going to reveal more secrets you didn't know about our market structure, and that is how the market moves. Trust me, this content is rare to find, and if you have been waiting for this video, endeavor to subscribe, turn on the notification bell icon to be notified whenever I post new videos, especially part 2 of market structure. So what is market structure? It is how the market moves. When the market is moving, it does 3 things. 1, it goes up, which is an uptrend. 2, moving down, which is the downtrend. Sideways, number 3, which is ranging or the consolidating. So let's say the market is moving from A to B. The market will not move in a straight line, but rather in a zigzag. So in an uptrend, when the market goes up, it makes higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And the abbreviation HS stands for higher highs and HL stands for higher lows. And so when we have higher highs and higher lows, we are looking for these 3 candle pattern, 1, 2, 3. And when you have your higher highs and higher lows, we are looking for this. Make sure that the candle in between is lower than all the other 2 candles, and the same thing goes for the higher highs. Make sure that the candle above is above the other 2 candles. Similar on this example, price will make a higher high, higher low, and this upper candle is the higher high, 1, 2, 3, and the middle candle is always above the other 2 candles. On the higher low, 1, 2, 3, the middle candle is below the other 2 candles. When you are marking your market structure, price goes up to make a higher high. Take a trend line and mark the swing point. That is the last higher low in the new or recent higher high. This will show you your trading range. When price comes back down to make a higher low, then price goes up. You see this, the candle will close above the high. That's what we call breaking market structure, or BMS. When you see price breaking the highs, it means it wants to continue going higher. So if this is our higher high, always make sure it is the last swing high. If there was highs before this, 1, 2, 3, they are not considered, but rather the last one. And this line here, you mark the high of the week. So you mark right here and also right here. So this was our higher high, then higher low. Then when you see this price breaking this high here, this is what we call BMS. And so what is BMS? Look at this chart here. Higher high, 1, 2, 3, higher low, 1, 2, 3, and this is what we call a BMS, a breaking market structure, and that is when a body of a candle crosses above this high. That's a BMS. Let's look at down here. We have a higher high here, 1, 2, 3, then a higher low, 1, 2, 3, and then we have this. So this is not a BMS because it's a wick. I want you to take note of that. You can see several other examples here. You can see only the wick, and this is not considered as a BMS. Take note of that kindly. It is not a BMS. If we look back on this chart, when you see your BMS, price goes up, makes a new higher high. Once it makes a new higher high, take your trend line to mark your new higher low and higher high. Then price comes back down to make a higher low, goes up again, makes a BMS. And if it continues making higher highs and higher lows, higher highs and higher lows, that confirms an uptrend. And so we have this example here. Notice how price moved from A to B, but to get from A to B, price did not move upwards in a straight line. It had to trend towards a new high point. The major highs get higher, the major lows get higher, and that is higher highs and higher lows. If you observe keenly here, there are minor highs before the last major swing high. As I said, they are not higher highs, but we want the last one. So what you do, you mark the last high. When you mark your range, a price goes down to make a higher low. This was a swing low, but it's not the last one. We want the last one. Price goes up again, as you can see here. This is a BMS. So our new range is this low and this high. So price comes down to make a higher low, goes up again here, BMS, and then higher high and then higher low. BMS, higher high, higher low. BMS right here, higher high, higher low. BMS, higher high, higher low. BMS right here, that's the uptrend. And then for the downtrend, we have lower low and lower high. So when you make a lower low, this is your lower low, the circled one. So when price makes a lower low, as I mentioned, take your trend line, mark the old lower high and the new lower low. Then price goes up to make a lower high. This is our lower low and the lower high. And then this is a BMS. And again, lower low, the new lower low. Price goes up again, makes a lower high, and then BMS right here. So this is a downtrend. So lower low, lower high, lower low, lower high, lower low, lower high. And all these are BMS, break in market structure here. That's the downtrend. As you can see, we have lower lows here, but we want the last one, which is this one. We also have this, but we want the last one, lower high. Price comes down. What is this? BMS or no BMS? Guess. I count 1, 2, 3. No BMS. Why? Because we have just a wick, not a candle closure below. This means our range is still this high and this low here. So the final BMS was right here, and then we have a lower low and lower high. Then price comes down. This is the lower low, lower high, lower low, lower high. Price continues moving down, and that's the downtrend. All right, let's look at the last phase of a trend, which is a consolidation or a ranging market. Higher high, higher low, higher high. Like I said, when you have a new higher high, take your trend line to mark the higher low and the higher high. If price creates a higher low and breaks the high, it means we are bullish. But if price breaks the low, it means we are bearish. I repeat, if price is breaking the highs, we are bullish. But if it's breaking the lows, we are bearish. So what is a ranging market? So let's say price creates a new high, comes down to create a higher low, then you buy here. But then price does not break market structure and does this. Now this is a ranging market moving sideways. That's what is commonly referred to as range, contraction, consolidation. They all mean the same. In a ranging market, the most important key levels are this one here, and this. If price is not breaking this high or this low, we are in a range. Even if it does this, price comes down here. Let's look at the candle. Okay, the candle is like this, which means price has rejected the lows, and then price rallies up again. This is not a BMS, right? So we are still in a range, and you do not move this line here. The line is still intact, still in a range until you see a clear BMS like this one. There we are bullish, then higher high, higher low, higher high, higher low, and if price breaks the low BMS, then we are lower low, lower high, lower low, lower high. Let's look at a fake breakout. That's the one you find in a range. When you see a BMS, right, this becomes a lower low. So we are expecting a lower high and a lower low. But the price does this, lower high, no low. Then price does this. It continues with the old range. So this one here, right here, is what we call a fake breakout. A BMS that fails and the price returns into the range. Let's use a bullish scenario, a break in market structure. We have a higher high, then a higher low, then there is no higher. Price continues within the old range. So this is a fake breakout. Okay, a downtrend and uptrend. The next thing is premium and discount. If this is not your first time watching my videos, I'm sure you have heard me share it in my videos. So when price goes up to make a new high, then higher low, then a new high, then take a trend line to mark the swing points. If you take your Fibonacci and divide the swing points into a half, this area above 50% is the premium, and the lower part below 50% fib level is the discount. So premium means higher prices, discount means lower prices. So when the market is bullish, we want to buy in discount or at low prices. In an uptrend, we are buying, and then a downtrend, we are selling, unless you are trading against the trend. So discount, price goes up, PMS. Break in market structure, when a new high is made, this is now your new low and the new high. And the 50%, and this means this is the new discount, and this the new premium, and the price comes down to the discount, then break in market structure. So in an uptrend, we usually buy in discount and sell in premium, right? In a downtrend, lower low, lower high, BMS. So our range is this high and this low. Pull your Fibonacci. This is your premium and this your discount. Okay, only sell in premium and buy in discount. Price goes into premium, you sell, break market structure, you mark the new range, and this is the new premium, new discount. Wait for price to come back into premium and sell, and then BMS again. Always sell into premium. The question would be, does this apply in a ranging market? Obviously no. When you reach in a ranging market, what you should do, you divide the low and the high into a half, then you again divide the range, rather than the 50%, into a half, which means you are dividing the whole range into quarters. So you will be buying in the deep discount and sell in the deep premium, and do nothing in the middle part I have circled. Please stay away from the middle part, because price likes to play around those or that area. If you have made it this far, congratulations. It means you're in love with Forex trading and you are going to make it in this industry. And therefore, please, if you like this type of content, subscribe, turn on the notification bell icon to be notified whenever I post new videos. Endeavor please to give me a thumbs up. Give this video a thumbs up to enable YouTube to push it in its algorithm. And you may consider sharing it to your colleagues. Remember, this content is paid, but I have just given it for free, please, so that you can also make it successful in Forex trading. Good luck.